Here's your host, Dan Celia.
Welcome back to Financial Issues. My name's Dan Celia. It's great to be here. And we'll go through some economic news that we have coming out this morning. Then we're going to get to the phones at 866-300-9298. And I just want to remind everybody, I have once again, I had a little lull there for a little bit, but been getting clobbered with emails. And, you know, sometimes the best way you can get your question answered, unfortunately, is to call and be on hold and try to get through. But that is the best way. So you may want to queue your call up, 866-300-9298. Also, by doing that, by getting through on the program and asking your questions, you always need to remember that there are probably a whole lot of people out there, to the tune of tens of thousands of people out there, that have the same question you have. So, you know, it's always edifying to the rest of the listening audience or viewing audience to get that question. So give us a call at 866-300-9298, 866-300-9298. This is going to be a relatively low economic data week. We don't have a whole lot of economic data coming out this week. Tomorrow morning, 10 o'clock, we get the JOLTS number. JOLTS is job openings. The job opening number, these are what corporations feel as though they're going to have in way of job openings. So that's a very interesting number. That's going to be out at 10 o'clock tomorrow. Nothing really out today. Also, Wednesday, we have the Treasury Department putting out their January budget number. That's not of interest to anybody but me. I do print that out and take a look at it. But that's coming out tomorrow, 2 o'clock. Initial claims, of course, on Thursday will be out. Those filing for first-time unemployment claims, they're expecting the number to be pretty much what it was this time, about 335, which would be up a little bit more, but that's just a guesstimate. Retail sales numbers come out Thursday. That should be interesting. That is the January retail sales numbers. They're expecting that to be down 0.2%. It was up 0.2% for December. They're expecting January to give that back. So we'll take a look and see how that shapes up. On Friday, we get export numbers out. We get industrial production. I like industrial production number. So that will be out on Friday. So we'll watch that. What else? Oh, Michigan sentiment number. I think this is the second look at Michigan sentiment number, and that is expected to be down a bit from where it was last week. So we'll watch the Michigan sentiment number for February. That's for February, obviously, and that will be, I think it's the second look. What's today's date? No, it must be the first look. Because last week would have been the final look for January. So first look for February. So that's what we're looking at as far as economic news, what's happening in the world of economic data. Listen, you know that the markets closed slightly up last week. So that was good news. So we had some very volatile markets, some huge swing, mostly on the downside. With that downside swing, with those downside swings, we had a fair amount of volume. As a matter of fact, a lot of volume, a little above average. That tells us something. That gives us some indication of where everybody's head is. I think that they're thinking the markets were so big that surely Janet Yellen's going to step in and hold back on maybe some of the quantitative easing. We're going to hear from her this week. It'll be interesting if she gives any indications to that effect. But as a result of that, the Dow was up 165 on Friday. So the indicators eked out an up week. Not even 1%, just fractionally. Eked out a up week, but it's better than a negative week. So basically last week was a stay still, not move week. Stocks are adding so far this morning. It looks like things are negative right now this morning. We'll have to see. It looks like things in Europe are turning a little bit negative as well. And we'll keep an eye on all of that. The dollar is weaker. It's falling against the yen and the euro, with investors still trying to digest the weaker than expected U.S. jobs report last week. I don't know what they're trying to digest. I guess they're trying to figure out how they could have possibly been wrong. It's the only thing I can figure. But anyway, they're trying to digest that. We get the Federal Reserve's testimony. Chairwoman Janet Yellen will be talking and maybe giving some clues as to what the central bank thinks about all this. There was a record amount of shift last week from stock funds to bond funds. Very, very interesting. Something interesting to note. That would be one of the reasons why we saw those down days like we did see them, because of this shift. So we had this dramatic shift from stocks to bonds. Now, bonds does not necessarily mean, and by the way, it was about $28 billion coming out of stock funds going into bonds. Now, when I say bond funds, a money market mutual fund, even though we might say, well, that's cash, that's not a bond fund. No, technically, it's a bond fund. It is a mutual fund, and that would be also classified that. So this huge flight to safety. Now, I am still at the same place I've been. I am not where I believe that bond funds necessarily are the safest place to go. But the reason why you see this flight, when people, the average Joe, gets thinking about their investment strategy, say, hey, I got to get safe. Or maybe a lot of people listening to what I said late December, early January, and saying, look, it's time to get out, capture your gains, get your profits, move into something that you can capture that and keep that. Okay, move into something, and they talk to their financial advisors, and the first thing the financial advisor says, well, bond funds are what's safe, and they move to bond funds. I don't believe that. I don't believe that bond funds are necessarily safe. I think they are a little bit safer today than they were back in late last year. But if we see any kind of drive back up in the 10-year, right now the 10-year has been going down, obviously because of this flow inward to bond funds. We've seen the 10-year come down, right? People are buying it. It comes down. And so we have seen that, but how long is that going to keep up? If we start to see quantitative easing, if we start to even hear a whisper about inflation, I am not necessarily, I think we could see some inflation 7-8 months. I think that I'm not really thinking there's going to be a huge amount of inflation. If there is, it's probably going to be inflation that is going to be not necessarily self-inflicted, as I originally indicated early this year, because I think when the Fed goes back to, if they go back to quantitative easing and they figure out it's not working, then they're going to have some self-inflicted inflation. But I think we're going to start to see that as things begin to change. But we're seeing this huge flight from stocks to bonds. I'm not a proponent of that. I'm not suggesting of that. If you go to my website, if you're a partner with me on the website, and if you are, thank you. I sure appreciate it, because it is a huge support, a huge part of our support here for the ministry. And I sure appreciate it. But if that is the case, then one thing that is that this morning, my buy list got a little bit shorter. It was already short enough. It got a little bit shorter. There were some things that came off the list. I did not put anything on there. I have a very short commentary section today. Didn't talk a lot about what's going on in the markets. Talked basically what I think. There's a little paragraph there as to what everybody's saying and what I think. So you might want to check that out if you're a partner with me on the website. So anyway, we've got a lot of talk around still this report that came out of the CBO and the job markets and what is happening there. Very interesting conversations going on. It looks like it took the weekend. But now that the weekend is over, all of the Democrats, all of the liberals are on the same page that job cuts, losing jobs, is a good thing for the economy. Okay, they're all on that same page. It's amazing. I suspect had the report came out saying it was creating jobs, then creating jobs would have been good for the economy. But the interesting part is I got to give them a lot of credit for the chutzpah that they have to get out there and put this out there that flies in the face of even common sense, let alone economic common sense. But nevertheless, that's what's going on out there. Very interesting to see some of the conversations in and around Obamacare and this idea. Let me just mention this. I want to play a clip from Keith Ellison. Keith Ellison is a Democrat from Minnesota, and what he said. And then I want to talk a little bit about what a couple others said. But I want you to keep in mind that we might forget this. Do you know that back in the 30s, when Social Security was being put out there, one of the things that was putting out there about Social Security that was one of the ways they sold it was the idea that it was going to create jobs for younger people because people were going to retire. It was going to get people out of the workforce. And it was perceived to be a good thing because back then they had a mindset that we were going to have this perpetual high unemployment rate and that we were going to have this perpetual situation where people were not going to be able to get jobs. And so that was one of the ways that they sold Social Security. It seems like they're using the same argument to sell Obamacare and the merits of it. Listen to what Keith Ellison says, Representative Keith Ellison, Democrat from Minnesota.
You know, if you look at international comparisons country by country, Americans work way more than the average of industrialized countries around the world. And, you know, we might want to look at our our work-life balance, and this is something that gives us a great opportunity.
One of the reasons why Americans live better than people around the world, because they do on balance.
Well.
You know, so in that, I mean, we work way too many hours. I sent out on my Twitter feed at Financial Issues, by the way, at Financial Issues, and it's on my Facebook page, this article in reference to this. And basically what he says is, you know, we just, I said something like, is he a member of the French Parliament? I mean, really? So this is a good thing. It's a good thing. Now, you won't have any money to pay your bills. So this working less, I guess you're just going to sit around. But, you know, nevertheless, it's a good thing. As a matter of fact, Jared Bernstein, who was on CNBC this morning, he was the chief economist to Vice President Biden, who certainly needed a chief economist. He said this.
There are people whom once they figure out that they can get health insurance outside of their job for less money, will quit their job and do something else, and that something else will make them happier.
Now, that's very different than saying that, well, it's a good thing that you're only working a few hours a week because you have more time. Basically, what they're saying, this is the other spin that the Democrats are putting on this. This is a good thing because there are all these people that are working in miserable jobs, and they would like to do something they'd really like to do, but they can't do it because the job that they'd really like to do does not offer health insurance, and they haven't been able to do it. I'm not saying that's entirely wrong. I know some people in that situation myself. So what he's saying is this is a good thing because we're going to have a happier population because people are going to be able to go out there and do whatever they want to do without any concern of health insurance. This is exactly what this administration is banking on. But I don't know if do we have time for this other clip? Let's see what we got here. Yeah. Let me go. So here's Dick Durbin. Now, this is the argument that is just driving me crazy that nobody in mainstream media is picking up. Go ahead.
The bottom line is this. 10 million Americans have health insurance today who would not have had it without the Affordable Care Act. 10 million. And we can also say this, it is going to reduce the deficit more than we thought it would. We are seeing a decline in the growth of the cost of health care, exactly our goal in passing original legislation. I'm finding people as I go across Illinois who for the first time in their lives have an opportunity for affordable health insurance for their families. And I think ultimately we're going to find you can't go back.
Wow. I got to comment on that because you have no idea. He has no idea what he's saying. Very interesting. 866-300-9298. We'll be right back.